Hello everybody. Our chapter today is about revenues and expenses. The objectives of this chapter: in objective 1, we will see an overview as usual. What are the accounts that we use according to the Lebanese chart of accounts related to revenues and expenses adjustments entries. In the second objective, we will see how we actually calculate or pre-calculate prepaid revenues and the prepaid expenses. In objective 3, we will see how we deal or what are the accounting treatment for expenses due under payment. Then we will move to deal in objective 4, unearned revenues. What do we mean by unearned revenues? Or revenues actually received in advance. Finally, the fifth objective of our chapter is about other related issues related to the revenue and expense adjustment. Starting by objective 1, as usual, the Lebanese chart of accounts set sum of accounts and specific class digits or number accounts in order to record all revenues and expenses and their adjustment entries. As we can see in the red color of these accounts, in this chapter we will use accounts such as 4018, invoices not received yet; 4019, earned discounts and allowances; 4038, account invoices not received yet; and 4039, earned discounts and allowances. Also, in the client's accounts or debtors or customers, we will use the account 415, advance on works unbilled, and account 418, invoices under preparation. We will continue with the Lebanese chart of accounts related to the accounts that we will use in this chapter. Also, we have account 421. Here we record all accounts related to payments due to personnel. Also, 428, when we have actually payments or accounts receivable related to our personnel who are working inside the company. Also, we'll use accounts 431 related to payables to social security, like the social security fund in Lebanon. Also, we will use other actually accounts related to government and public institutions in account 441 related to taxes due. There may be also 443 account, income tax on net results, and so on, and other accounts related to this account. Also, in this chapter, we will use accounts related to deferred charges. These are charges that we will distribute on different accounting periods. Also, account 472 related to prepaid charges, and 473 for accrued income, and 474 for accrued unpaid charges or expenses. So all these accounts we're gonna use in this chapter according to the Lebanese chart of accounts. Related to other revenues accounts, we will use also 7619 account when we allocate operating expenses. Also, we will use account 7789, allocation of financial charges or expenses, and also 7889 related to allocation of exceptional charges. Also, we will use discounts and allowances, and 6019, these actually related to all the discounts that actually we receive from our suppliers. And also 719 accounts related to discounts and allowances that we give to our clients when we are actually when we sell actually products to our clients. So these are the main accounts that we will see in this chapter according to objective 1. Continuing with this objective, as we all know, the principles of accounting, one of the key accounting principles is the independency of accounting periods. It means that Actually, each accounting period must include the transactions related to this period. If I'm actually recording transaction related to 2025, I must record expenses and revenues occurred during year 2025 or 2026. So each accounting period, each fiscal year must have actually its own specific occurred expenses or revenues. So the company must journalize only the operations belonging to the period or the year in which the company takes into consideration the following rules. The prepaid expense, because sometimes we pay expenses in advance. The second rule is the expenses on the accounting period, even if it will be paid in the next period. It means that all expenses related to the specific year I am working on, I must record them even if it will be paid in the next period. So when the expense actually occurred or paid, even sometimes it's paid for next accounting period in advance, I must record an expense in advance. The advance payments also does not include to the accounting period if the merchandise will be delivered in the next accounting period. So this is the third rule actually related that we must actually focus on. If an advance payment does not include or does not relate to the accounting period, if the merchandise will be delivered in the next accounting period. So the date of delivery of the merchandise must be greatly considered. The revenue also of this accounting period journalized even if it will be received in the next accounting period. So these are very important basic rules we must consider related to the independency of accounting periods when we are recording revenues or expenses.